Welcome back everyone, Jake here. In this video, let's talk about exactly how much money I made from active trading last year. I know in every video I'm supposed to say this is not financial advice, do your own research. But obviously, for a lot of people, doing your own research means watching videos on YouTube. So in the event you're following certain finance YouTubers that talk about certain stocks or make certain trades, and they're not revealing to you exactly when they're buying, how much they're buying, and when they're selling, and potentially how much they're making, or more importantly, how much they're losing on some of these trades. So in this video, I feel compelled to be 100% transparent with you guys to prove to you that on my channel, I practice what I preach. So these are all of my investment accounts, and in my 401k, my Schwab IRA, and my Morgan Stanley account, all I'm doing is buying and holding long-term index funds, so there's nothing really to report. So let's go through my Schwab accounts, my Robinhood accounts, and my Fidelity accounts and see exactly how much money I made this year. So let's start with my Schwab account, and for those of you who have been with my channel this last year, you know that on January 1st of last year, I did a brokerage account challenge where I put $25,000 into this account, and then through swing trading and trading options, my goal was to double my account size. So I have not added any money to this account the last year, and I reached my goal at the end of June. I doubled my account to $50,000. I then kind of took the summer off, guys, and mellowed out in this account. But in the last 2 months, I've gotten back into it. Year to date, so my 1 year performance, I am up over 140% or gaining about $35,000. If you guys want to follow all of my trades, I document everything that I do in my Schwab account. I'll put the playlist down below if you guys want to catch up. But I have about $7,861 in unrealized gains. So these are positions that I haven't sold yet for a profit, so I'm not paying taxes this year on this money. So with all of these accounts, you have to factor in, you have realized gains from buying and selling, and then you have unrealized gains where those are positions you haven't sold yet for a loss or a profit. So if we go to the tax info page on Schwab's website and search the calendar year of 2021, it will show me all of the trades that I've made, and it's kind of messy, guys. For those of you who watched my channel this year, you'll know that I was buying fractional shares of basically every company in the S&P in my Schwab account. That makes my records a little messy. So going forward in 2022, I'm going to keep track of stocks that I want to watch on Yahoo Finance, so it's not basically creating a mess like you see here. But you'll notice that it's telling me my realized gains, and I have $27,115 in realized gains for 2021. This is the money that I'm going to have to pay short-term capital gains taxes on. So realized gains, $27,000, unrealized gains, $7,800. Additionally, in all three of these accounts, I made a little bit of money in dividends here and there, but let's just round that out and not include that in my final total for this year. In my Robinhood accounts, this is actually easier to understand and see because Robinhood's chart automatically adjusts for deposits. So over the last couple months, I've put in about $21,000 into my Robinhood accounts. I wasn't using it for the first half of the year. I then put in some money, made quite a bit on a couple options plays, and then lost a little bit on some more option plays. If you guys, once again, were following my channel, you know I did something called the Dividend Capture Challenge in my Robinhood accounts, and that basically just lost me money, but I wanted to prove that it wasn't a viable investing strategy. In the last 2 months, though, I have been actively trading in this account and doing credit and debit spreads. So amongst these 5 positions, I have basically an unrealized loss of about $2,000, but that's factored into my 1 year performance here, where I'm up 11,272, or about 53%. I think being up 53% on my cost basis, basically just in the last couple months, is pretty good for my Robinhood accounts. But I'll show you the final numbers in a second of what, once again, realized gains and unrealized gains. Finally, in my Fidelity accounts, I'm just going to have to show you guys screenshots because Fidelity insists on showing my full account number in multiple locations on every page. But in my Fidelity account right now, I have $120,000. And right now, I'm just buying and holding S&P 500 index funds. I've got about 200 shares here with an unrealized gain of $2,100. And I'm holding about $25,000 in cash. What I've been doing recently in my Fidelity accounts to basically slow it down and de-risk it a little bit is I'm just selling covered calls on these 200 shares for premium when the market is overbought. When there's a brief sell-off, I then buy to close them in order to lock in basically gains. Additionally, with this money, it's not enough to buy another 100 shares of State Street's SPY yet. So I've just been selling cash secured puts on very stable companies that I wouldn't mind buying anyways should I be assigned. But I'm just trying to earn a little bit of option premium from selling options in my Fidelity accounts. So how has my Fidelity account performed this year? And this chart shows it very well. This shows my balance and performance activity for the entire year of 2021. At the beginning of the year, guys, I only started with $9,500, and my Fidelity account was my overflow account. This is the extra money that I was earning from both YouTube and the Air Force. I was depositing it this year in my Fidelity account. So deposits, I added $67,000. However, how much did I make on this money? I made from investment activity $44,200. So this blue line shows basically my balance if I wasn't investing, and the dark blue shows how much I made from investing with my money. Another way to look at it on Fidelity is you can break it down month by month, and you'll notice that most of my gains, total 44,296, came in the months of March and April. This is when I was actively trading in my Schwab account for my brokerage account challenge, and I was seeing opportunities that I wanted to use extra money in my Fidelity account. So most of these gains came from trades I made with call contracts on Adobe, Costco, and Dollar General. Once again, when I mellowed out in my Schwab accounts, taking the summer off, I also basically stopped being as aggressive in my Fidelity account. However, you see here, Omicron hit in November. My account went down huge. I just stayed the course, guys, and I sold some more cash secured puts when the market was down, and I snapped back really nice in December, up 10,000. Fidelity is also pretty cool because it shows you your annualized returns. This is my investment rate of return, factoring in when I made my deposits this year. So my year-to-date performance, once again, kind of prorated when I made deposits. My rate of return this year was 123%. Pretty decent. I definitely outperformed all of the indexes. Life of available data, this is when I opened my accounts in October of 2020. I'm up 95% on my trading in my Fidelity account. So let's go through the final numbers for these three accounts. And in my Schwab account, I started the year with $25,000. In my Robinhood account, I added about $21,000 this year. And in my Fidelity account, I started with and then added a total of $76,000. And once again, we have realized gains. This is from buying and selling. This is what I'm going to have to pay taxes on this year. And then we have unrealized gains. So I have about 7,800 unrealized gains in my Schwab accounts, negative on a couple debit spreads at the moment in my Robinhood accounts. And then I'm just holding, once again, shares right now of State Street's SPY for a little unrealized gains in my Fidelity account. So what is my net gains? My net trading activity for the entire year of 2021, and it's a total gain of $90,771. That's pretty decent, guys. Now, the first comment that I know I'm going to get is, holy cow, Jake, you're going to owe a lot of money in taxes on all this short-term trading that you did. And in the future, I will make a dedicated video explaining my tax obligation for 2021 between my Air Force income, my YouTube income, and my trading activity. I am going to owe the IRS a lot of money. But it's actually pretty easy to calculate from your trading activity how much you'd owe. Just look at your realized gains and add these three numbers up for me, basically, and it's about $80,000. Now, this money, this $80,000, is probably going to fall in the 24% marginal tax bracket. So just take 24% of 80,000, and I'm going to owe the IRS about $20,000 in short-term capital gains tax. Now, the next question you might have is, Jake, how exactly did you do that? How did you make all that money from actively trading? And, well, guys, that's basically what my YouTube channel is dedicated towards. Last year, I made over 150 videos talking about investing in all my trades. If you guys want to learn from me in 2022, please subscribe, give this video a thumbs up so other people can find my channel. But I want to quickly share with you how I didn't make this money. And I didn't make this money by investing in ARK or any of Cathie Wood stocks, Roku, Teladoc, DocuSign. I never traded or invested in any of the meme stocks, AMC or GameStop. I didn't invest in any IPOs or SPACs, so Robinhood, Coinbase, whatever. I didn't invest in any joke cryptocurrencies this year, so Shiba Inu, Fluffy Coin, Dogecoin. I also didn't invest in any EV stocks. I think they're overrated. Neo, Lucid, the other traditional auto manufacturers like GM and Ford. Now, can you make money from these investments? And yes, you can. I don't want to give you the impression that people aren't making money from these investments, because definitely they are, but they're short-term trading it. In my opinion, all of these, in some form, are pump and dumps. Are they good long-term investments? And I just don't think they are. And the reason why is because there was an opportunity cost this year for not investing in the S&P 500 index fund. If you just bought and held the S&P 500 index fund starting January 1st, you would have been up over 28%. This was one of the best years on record for the S&P 500 index fund. So when you look at the performance of all of these from when you discovered it, when other finance YouTubers were talking about it and promoting these things, are you up over 28%? And I don't think you are. When you look at how some of these investments have performed, especially the last 2 months, a lot of them have crashed pretty hard. And we can just run through these real quick. Cathie Wood's ARK Innovation ETF is currently down 24%. Once again, S&P 500 up 28%. So Cathie Wood underperformed the markets by over 50%. Now, could you have made money buying here and then selling here? Sure, you can short-term trade this, you can make decent money if you think you have the skills. Now, is this a good long-term investment? Maybe you're buying this fund saying, yeah, I believe in these stocks, I believe in her strategy, I think long-term I'm going to make a lot of money. And once again, you could have just held the S&P 500 index fund the entire year and then bought the fund when it was down here. If you're following certain finance YouTubers and they're not telling you that something is overvalued and you should wait to get it at a cheaper price, then are they just selling you hype when it's going up, or are they giving you sound financial advice? Same thing with GameStop and AMC, guys. If you made money on this, congratulations. But it had to have been a short-term trade. If you were buying AMC back in January and holding it, I mean, you basically are a psychic. But most people who discovered the meme stocks or got involved here when AMC was at $60 and all the finance YouTubers were saying AMC is going to $100 a share. We have the floats, we're going to continue short squeezing the hedge funds. It's going to $100. Well, people believe that, and they bought in here. They're basically a bag holder. They're down 56%. Same thing with IPOs and SPACs, guys. I've made several videos talking about this. I will continue making videos warning you about IPOs and SPACs in the future. Yes, it's very exciting those first couple weeks. Short-term trading, you might be able to make a lot of money, but do not buy IPOs and SPACs thinking this is a good long-term investment because the overwhelming majority of them, 95% plus, this is what they look like. Robinhood is down 50% from its IPO valuation. This is not something you should be investing in. Same thing with all of these joke cryptocurrencies. You can make the bull argument for crypto, maybe investing in Bitcoin or Ethereum. But when you gamble on Dogecoin, you're going to be down 74% from when Elon Musk hosted SNL and everybody was talking about it, saying Dogecoin is going to $1. It got as high as 65 cents. This is never recovering, guys. Once again, in the short term, if you want to trade it, you can make money, but to think something like this is a good long-term investment, anybody on YouTube telling you that, I wouldn't follow their advice. And then finally, we have all of the hype and hysteria around all of the electric vehicle stocks. I honestly don't get it, guys. These companies are massively diluting you by issuing new shares, and they're not profitable. And it's also just impossible for all of these car companies to survive this initial explosion of this new sector. So everybody a year ago was talking about NIO. Its share price, no surprise, is down 40%. Lucid, Rivian, all these other companies. As the traditional automotive makers, GM, Ford, Toyota, BMW, as they all transition to electric vehicles, are all of these startups and newcomers really going to be able to compete? Are we just going to have 15 electric vehicle car companies that are in the S&P 500? Like, there's just not enough global demand to justify the valuations that all of these electric vehicle stocks are getting. So which of these companies are going to go bankrupt? We don't know yet, guys. But to say that these are good all of them are good long-term investments. Once again, guys, terrible advice. If you want to trade any of these in the short term, they're basically all just pump and dumps. And finance YouTubers are going to promote them after they've gone up. They might make a video here and there, but those videos aren't going to get a lot of clicks. What gets clicks, guys, is when something has already gone up 50, 100, 200%. So if you're buying up here and you're a bag holder because someone told you this was a good long-term investment, you just got to be careful of those trades, guys. And the reason why so many retail investors have lost money this year is because they're not doing fundamental analysis or technical analysis. They're only watching YouTube videos for qualitative analysis. So fundamental analysis is looking at the financial statements of a company. Are they doing stock buybacks? Are they growing their dividends? Is this a profitable company? And most of these investments are not profitable and not taking their fundamentals seriously. They're so concerned with growth and expansion that they're taking on massive debts. They're diluting their shareholders. They don't have good fundamentals. Same thing with technical analysis, guys. If I can teach you one thing on my channel, let me teach you that if a stock is below all 4 of its major moving averages, don't buy it. It's currently downtrending. It's gonna fall farther. So once again, guys, check the charts on when to enter and potentially when to exit position. But a lot of finance YouTubers really aren't giving their audience good support as far as technical analysis. So what do finance YouTubers focus on? And they focus on qualitative analysis. A good YouTube video that will get a lot of views, get good retention, is a video that tells a good story. And that's what people want to receive when basically making their investing decisions, which is why most people are so terrible at picking individual stocks, is because they want a good story. They want to hear about great leadership, a great product or service. It's an emerging industry. What's Kathy Wood's buzzwords? It's going to be innovative and disruptive, innovative and disruptive. Does this product or company have a competitive advantage? What are the newsworthy events? Yes, it's true that in the short term, qualitative analysis can drive a stock. News does drive the share price of a company. But in the end, guys, it's the technical analysis and the fundamental analysis that's either going to have that stock continue going up or drag it back down. So going into 2022, I'm going to continue avoiding these bad long-term investments. Once again, in the short term, you can do anything, but on my channel, I prefer just trading options and leveraging my money on very boring, predictable, large cap, profitable companies. I think I can get very dramatic, decent returns. My goal from my active trading every year basically is to get over a 100% return. I achieved that in 2021. I'm going to continue doing what I've been doing because it's been working. And let's see if we can keep this going in the year 2022. Okay guys, if you enjoyed this video, once again, give me a thumbs up so the algorithm knows it's good. If you have any comments or questions, let me know down below. I respond to as many as I can. Till the next video, take care.